Good morning, everyone. This is Charalambos Pissouros, senior analyst at IronFX, bringing you the morning comment for the 16th of November. Dollar bulls back on the case. After the dollar rally took a brief pause during the European morning yesterday, the greenback bulls took charge again and pushed the currency even higher against most of its major counterparts. The trigger for the latest leg higher in the greenback was the release of US retail sales for October, which beat the forecast and showed that the economy enjoyed another month of robust consumer spending. We expect the dollar to remain supported in coming days, but in the absence of any news regarding the future policies of President-elect Trump, we could see the buying pressure of the dollar to ease somewhat. We believe that investors may wait for fresh signals on monetary policy from Fed Chair Yellen tomorrow before they add to their positions. In particular, we expect market participants to look for a confirmation from the Fed Chair as to whether Trump's fiscal stimulus is likely to lead to a faster pace of future rate hikes, something that FOMC members like Lacker have already acknowledged. Moving to the energy market, WTI prices surged yesterday following headlines that OPEC and Russia will hold informal talks on Thursday and Friday in Doha ahead of the OPEC meeting on the 30th of November. We maintain our view that any material deal to freeze or cut oil output is unlikely to actually take flesh, neither at the Doha meeting nor at the end of November OPEC gathering. There are several reasons behind our call. Firstly, Iraq and Iran have both been very vocal about wanting to raise their production. The former because it needs the revenue to fight ISIS, and the latter in order to regain its pre-sanctions market share. Secondly, the levels to which OPEC agreed to cut output at the Algiers meeting are a thing of the past, as the cartel's latest monthly report showed that OPEC members continued to raise their production in October, even after they agreed to strike a deal in late September. This suggests that even if all members now agree to a cut, they would have to reduce output by much more than previously, casting further doubt over the probability for an anchor. If they agreed to simply freeze output at current levels, the market would likely remain oversupplied for a long time, given the latest surge in production. Having expressed our fundamentally bearish view, we have to state that we see a high likelihood for a short-term speculative oil rally as we approach the 30th of November meeting. We believe that the relatively low likelihood for a sealed deal is unlikely to stop oil bulls from driving prices higher in the next few days. Indeed, optimistic headlines regarding the prospect of a deal usually dominate fundamentals in the short term, as was evident ahead of the last few major producers' meetings. As for today's highlights, during the European day, we get September's employment data from the UK. The unemployment rate is forecast to have held steady, while average weekly earnings are expected to have accelerated somewhat. The forecasts are supported by the UK services PMI for September, which showed that job creation accelerated to the fastest pace since April, and that firms raised their prices in response to increased wage bills, among other factors. We believe that this data could confirm that the labour market held strong following the referendum and thereby support the pound. From the US, we get PPI and industrial production data, both for October. We also get the nation's NAHB housing market index for November. We have only one speaker scheduled for today, St. Louis Fed President James Bullard. For more information, including technical analysis, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, senior analyst at IronFX, wishing you solid trading.